Hey, everybody. Thank you so much for joining me. We're going to talk about the five stocks I'm buying in my own portfolio in March. Before we get into it, please take a minute and check out the link you see on your screen for a message from my sponsor, The Motley Fool. It's the best way to support this work I'm doing on YouTube, and you can get the top 10 stocks to buy right now from them. All right, so let's get into it. As I said, in March, it is a slower buying month for me, but I am adding to five of my existing stock positions. The S&P is at an all-time high. The Nasdaq just recently hit an all-time high. It's pulled back a little bit, but there are a lot of expensive stocks in the market. So I'm adding to five. There are some good bargains here, especially after earnings season. So I wanted to talk about five in particular. Number one, this is one that I've been adding to quite a bit recently, the Vanguard Real Estate ETF. It is, as it mentions, an exchange traded fund. It focuses on real estate, specifically real estate investment trusts. It is a 4% yielding ETF, so it's great for if you're looking for income. And a couple reasons I want to buy more of this one. Number one, real estate has underperformed recently. Their REITs are very interest rate sensitive investments. The stocks have underperformed recently because of interest rates, not necessarily because the businesses aren't doing well. This is a weighted ETF, so it gives you some nice exposure to some of the biggest names in real estate. Companies like Prologis, like Equinix, like American Tower. You get a lot of great exposure to these businesses. They should be a big beneficiary as rates drop. It's a question of when, not if, interest rates are going to start to normalize. And as I mentioned, it's excellent for income. Number two, shouldn't surprise anybody. I'm adding some shares of SoFi this month, and not just because of earnings. Their fourth quarter earnings were great. The company reached profitability on a GAAP basis for the first time ever and anticipates continuing to do that. Its growth momentum has been absolutely tremendous lately and continues to look very impressive. Really, the stock is down. It dropped 10% after the company announced a $750 million convertible note offering. Yes, there are some dilutive risks depending on what the exercise price of those notes can ends up being, but it's generally a positive for investors. It will cut down on some of their higher interest debts. They're planning on using it to eliminate some debt they have. I think at 12.5% interest. So that's a net positive. It'll give them better capital position. I'm I'm curious to see what the terms end up being of that deal. But SoFi is down significantly on the news, and I don't really think it deserves to be with the numbers it's putting out. So number three is Roblox, one that I haven't added to in a little while, but I am planning to buy more shares of in March. About a $24 billion market cap stock. I think it could be a lot higher in 10 years from now. It's about the closest thing we have to a true metaverse stock in the market right now. Their gaming platform is showing excellent growth numbers on both the top and bottom line. Made great progress toward profitability. A lot of their capital expenditures have now wrapped up, so you're not seeing a lot of that. A lot of monetization potential long term. Just to name a few things, they've rolled out the ability for its creators to sell actual merchandise, not just in-app like electronic purchases, but actual merchandise that'll show up at your house. Um, in-game advertising is a big potential area of growth. The company has about 71 million users right now. They aim to scale that to a billion long term, which is a very ambitious goal. But keep in mind that the biggest natural potential for Roblox is you know immersive gaming technology, which is really still in its infancy. You see the picture of the guy there who has a headset on, but with newer products coming out from Apple, from Meta, this is going to, the adoption is going to be a long-tailed demand driver, and Roblox is in a great position to capitalize on the adoption of those. So I think Roblox could be, it's probably one of the biggest risk reward plays in my entire portfolio. It's a very binary outcome, I think, over the long run, but I do think it has a lot of potential to be, a 10 bagger or more over the next decade if things start going well. And things are going well. So, really interesting story there. Number four, one that I haven't added to in some time. I've owned shares of Block. It was then known as Square. since shortly after its IPO and have held it ever since. Uh, Obviously, a very different company than the one I first invested in. When I first invested, the Cash App was, not really even a thing yet. It was basically this little square card readers that would go in people's headphone jacks. It's clearly evolved a lot. The Cash App has grown to about 56 million active users, and the company is adding more and more banking features that are really engaging users. The Cash App card, the debit card that's linked to that, is a big, successful growth driver. It's starting to see a lot of traction in direct deposit. There are about 2 million of those Cash App users that are directly depositing their paychecks into the Cash App. They're planning on rolling out more features over time. They just started doing an interest bearing cash account for their direct deposit customers. They're planning on rolling out things like check deposits, online bill pay, wire transfer capabilities. Essentially, they're ultimately planning to be a bank replacement. And with 56 million already engaged users, they have a big uh, leg up on the competition. Um, on the business side, the business ecosystem is still doing really well. Um, you probably see Square hardware at a lot of the places you buy food, buy and go to artisan markets. They're a big way that people pay these days. In the fourth quarter, the company posted pretty much blowout numbers on all of its metrics. It issues guidance for things like gross profit, for adjusted EBITDA, for adjusted operating income, and all of those it just blew expectations out of the water. So the numbers are looking great. The stock did jump a little bit after earnings, but I think it still looks like a fantastic bargain from a long term perspective, especially if it can really successfully become a bank replacement for its customers. Five, last but certainly not least, is EPR Properties. They recently reported their earnings. This is a REIT. If you're not familiar, they focus on experiential properties. Uh, the biggest component of their portfolio is movie theaters, which that's honestly why the stock is trading for such a cheap valuation. People are worried about the future of the movie theater business. AMC Entertainment's their biggest tenant right now. So the valuation is low. It trades for about 9 times funds from operation, which is the real estate version of earnings. In the fourth quarter, the company put up some pretty strong numbers. Um, Investment spending is slow, but that's by design. That's because cost of capital is very high, and it doesn't really make sense to borrow money to buy new properties at these levels. The company is diversifying away from its theater properties somewhat, but in 2023, box office growth in the North America was 20% year over year, and it recently renegotiated it settled its leases with Regal Entertainment, which is its number two movie theater tenant, which declared bankruptcy last year. And it resolved those leases in a very favorable way that actually ties a good portion of the rental income to how well the box office revenue is doing. And if it continues to grow year over year, then that could be a very good thing for EPR. It has an 8.2% dividend yield that is well covered by its profits right now. I don't really think investors have anything to worry about. Its other property types, other than theaters, are thriving. It has ski resorts. It has eat and play businesses. The big example of that is Topgolf, which is its number two overall tenant. It has water parks. It has cultural attractions. It has gaming properties. So outside the movie theaters, which make up a little over 40% of rental income, the business is very strong. The theaters are doing well, but do remain a big question mark. But with that level of income and just kind of the safety of the visibility into its cash flow, most of its tenants are on very long term leases. EPR is an income stock that I am personally loading up on right now. So hopefully you enjoyed that. I'd love to hear your comments about any of the 5 stocks that I'm buying, stocks that are on your radar for March, and just what you think. Thanks for listening. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.